Hello everybody and welcome to this week's free newsletter from Trade with Precision. My name's Simon Clarke, and in this video I'm going to be talking about common trading errors that prevents trading success. Now, many new traders, when they come to the markets, they focus solely on technical analysis and learning trading strategies that gives them an edge in the markets. Now, that's well and good, because you do need those skills and you definitely need those trading strategies. However, many tend to then forget to continue their learning, continue to learn the other essential techniques and skills in order to survive and master this business. If it were all that easy, if it was just the strategy that we ever needed. In fact, there are many other things that we need to master, like risk and money management, trading plan, what to do once we're in a trade management. We need to learn to think like a trader, think in terms of probabilities. We need to be able to recognize and manage our own trader psychology, to name but a few. Now, I'm going to try and sort of demonstrate one of those very traditional human emotions that gets in the way of many new traders succeeding in this business, namely greed. So I would try and demonstrate this by doing a bit of a retrospective review of a trade that I took last week. Now, this trade was on the Australian dollar against the New Zealand dollar. It was a trade that I put out to our members on our Precision Perspectives video newsletter before the trade triggered. So I was told people what I was looking at and the way that I was looking at trading this market. It's one of the strategies that we teach through our education programs here, and it's a nice strategy that I use on a daily basis. So let's take a look at it. I've scrolled the charts back so that you can see what I was looking at when I took this trade and when I saw the setup. So we're looking at the Australian dollar against the New Zealand dollar on the daily chart here, and we can see, well, the market's been in a context of a downtrend on the higher time frames, but here for a period of time we've been in a sideways consolidation. There's been trends within this sort of sideways consolidation, but we've been trading around this level. There's a sort of big key level right the way through this. This is 1.075. We can see that this level has been tested very precisely a number of times. So it's been support and resistance quite precisely many times through this bit of price period. Now, most recently, if we take a look at what's happened, we've got our high, we've got a low, we've got a lower high, we've got a lower low, we've got a nice downtrend here. We've got nice convergence on the indicators too, just agreeing with the momentum of the market and the direction of the market. Moving averages not quite in the right order on this time frame, but what I am going to be looking at is an entry on a lower time frame, not here on the daily. What I like though is the fact that the market has tested this level, it's then broken underneath the level, and now we're just coming back up and retesting it. So the fact that we're in a downtrend broken under the level, what I'm interested in is if I can see an entry opportunity around this area, opportunity to get short, put my stop above the high, above this level, looking for opportunities to the short side. And we can just look at where we are. I mean, there's potentially nothing in the way to stop price from continuing lower. So what I'm looking for is a low risk, high reward opportunity. So I came down here to the likes of the 4-hour chart, and here on the 4-hour chart is where I had the setup. So we can see that we've got our downtrend here, we've got much more mature downtrend here on the 4-hour chart, moving averages all in the right order here, nice what we call moving average geometry here. Markets in our downtrend, if we just pull back right in to the level, and now we've got a small bearish candle right at that level. Nice convergence on the indicators too. So all the techniques here, all the strategy rules for a strategy setup to the short side. So what I like to do with this is just follow the rules. So it's going to be a stop just above the high of the red candle here, entry just below the low of the candle, which means that I'd have an entry at 45 and I'd have a stop at 58. A nice tight risk on the trade for potential, well, very reasonable reward. I mean, if the market continued down and we got a new low, well then I'm going to have many new targets by the time I get to this low. And even looking at the daily chart, the likelihood is, I'd be holding in for quite a period of time on that daily chart too. Now, even though we've got a nice setup here in the market, I always follow my trade rules and my risk management rules, which means that I'm going to close half the trade out as soon as I hit 1-to-1. Reason being is that then I've locked into a risk-free trade. It means that I won't make quite as much profit on the trade if it does continue to run all the way down here to make new lows and even further, but it means that I've peeled the risk off that trade. So as soon as I hit 1-to-1, I can't lose out on the market. So this is what happened. Market continued to work in my direction. At this point down here, it actually came down to 25. My first target was at 29, so I just got my first target by 4 pips. And then the market promptly swung round, and it closed the second half of the trade out. So second half was, my stop was still in the technically protected place just above the high here. It came round and took that out. So for me, this was a break-even trade. If I hadn't have placed those good sound risk management rules, well then I would have been exposed to a full loss trade. Now what happened then was, as the markets then sort of played out, the markets now continued to make new highs. So I'd reevaluate the market, reevaluate the opportunities, but the point is that I'm trying to make is that many new traders fail to recognize this, these emotions within their trading, and greed is one of the biggest emotions that can get into the way of our success as a trader. And we need good sound risk management rules in order to deal with these things. So let me just tell you about a webinar that we are running this week. We're running 2 webinars at 2 different sort of time zones for the critical trading errors and how to avoid them. You can come onto our website here to register for these. You just need to come to the tradewithprecision.com website, come to the free live webinars tab here, and then you'll get to this page where you can register for these. Now this webinar, what it does, as the name suggests, it deals with, it highlights many of those common errors that new traders make on a regular basis. Not necessarily just new traders, but seasoned traders as well. It highlights them, but more importantly, it gives you tips and techniques on how to deal with them and how to avoid them and keep these out of your trading. So very good webinar to be able to get you off the rails if you're making some of these mistakes yourself, and also to be able to highlight some of these errors so that you don't make these yourself. 2 times that we're running it, 2 different time zones here depending upon where you are around the globe. 5 AM New York time, 10 AM London, 7 PM Sydney and 9 PM Auckland, or we have 3 PM New York time, 8 PM London, 5 AM Sydney next day, and 7 AM Auckland next day. So you can pick whichever time zone is most suitable for you, hit on the register button, and you can register for that webinar at that time. So I hope it helps, and look forward to speaking to you soon. Bye for now.